All right, I'm back. I had to do something with the car. I had to move it from another parking spot. You ready? Input? No. And as I have explained within my annotations, what I expect from this session is a range bound consolidation. I don't understand it. I don't expect anything one directional because of the time of month in which we're trading. Also, just show you 1 second. We're currently trading inside of this range here. So until we break out of this range, I anticipate the market to consolidate within the equilibrium from this high into the body low. So the body low and the body high here. Reason why I use the bodies and not the wicks is because we have a big wick to the downside. And when this happens, we're going to use the bodies. This is also applicable to standard deviations. And on my long-term view, as I have stated within the first week of January, I would prefer to see the market go higher first. My narrative kind of switched within the yearly perspective. I would want to see higher prices throughout the whole year, not just throughout the first quarter. I want to see a bullish year, not to the degree of speed that we've had within 2024 or with the distance, but I want to see the market go higher into my 75% BT of the 12-month Fulcrum standard deviation, which is a 12-month level as it suggests, the -1, and higher levels than that if the market wants to achieve that. But in order for me to see that, I have to see the market first break out of this current range that we're trading in, and this is one of the reasons why I skip most of January in general, and I go in and I try and trade the February to April or to May's seasonal tendency. Just go back into 15. By looking at this 15-minute, I obviously see the market being stuck within a range bound consolidation with this big wicks. What my journal said or stated before the session was the fact that I'm going to anticipate to trade intraday volatility, which means that the market is going to take a level of sell side. Then I'm going to look for the next or the opposing without a one directional bias, neither for the session or the day. And by looking at this 9:30 opening, along with the previous range, along with the London session, I would expect a lunch, unfortunately, a lunch run to the AM session buy side. I don't think you will be able to stay within that in order to take a signal upon my trading premise. Let me look at something real quick. 7:31 was beautiful. I did not look at the chart at the time, so I cannot do anything with it. We have the London session being taken, and then we've had an opposing London session, or the 6:30 rather, by stop run, which could have been used with the intraday volatility perspective, in which I don't have a one directional premise for the day. I also want to state within the macro perspective of our mentorship or our signals that throughout this year, what I try and do, because within the previous year, I've tried to only trade within the direction of the day. what I also will try and do is try and trade these types of days. And I'm going to, of course, advance with it slowly. So not I'm not going to try and trade them with the normal leverage that I do. I'm not going to try and trade them with the same amount of quote unquote precision, or I'm not going to demand myself to be very precise within this environment. But what I'm going to try and do is I'm going to take and advance with it slowly and take small trades and small surgical strikes. And you're going to see a lot of me losing throughout this year because I'm also trying to develop my anticipatory skills in terms of determining more or into basically knowing when the market consolidates. I'm going to focus more on anticipating the market to consolidate, which by extension will give me when the best days to trade are. But I'm going to also try and trade intraday volatility. So this is a beautiful sell side run against the 8:30 news sell side liquidity pool. We've also went a little bit below that long session sell side again. We've went back into the SIBI, went above this level of buy stops. I don't like this current trading range, but I'm going to try and switch to a 1 minute chart to see what's really going on here. Sell stops were taken. We have a level of buy stops here with the relative equal highs on the right. Here, you can name these relative equal highs because retail sees this as resistance. Same with these, same with these. Got the market coming back into a busy. We're now currently, if we're correct, this is the third candlestick of a swing low. The market should not go below this in a one directional environment, and we should use the consequent encroachment of this wick here to see some kind of support to the upside towards this level of buy side. I like the fact that we opened with a volume imbalance, which is the difference between these candlesticks closing and this candlesticks opening. This gap, this is a volume imbalance. And I would like to see the bodies stay above the 50% of this wick here if we are going to trade for this level of buy side. So we went back into this busy. Of course, we took the sell side, which is, if we're correct, this is where smart money accumulates. And if the market goes below this, then it means that I'm wrong, right? But if we are correct, and this gives me the rule set, right? If I'm correct, then the market should not go there, right? If I was trading within a one directional bias, of course. I'm also looking at this mitigation block. I would like to see the market close above it and use it as a means of support, again, towards this level of buy side. And this one, this is also an hourly level in which I want to see the market find some support, or the market opens and it gets rejected if you do not like that word. What I'm currently looking, and this is for mentorship purposes, if I was in a trade, there's a saying set up this fair value gap, even though it's not 9.50 cents right now, is I would, inside of this candlestick, constantly measure where we are in terms of the 3 PD race, because I know that is one thing that you want to understand from me. I also look at this blue shaded area as this is my hourly busy, and I saw the fact that we closed above it, which can give me a sign on a 1 minute chart. This is this level of buy side being taken, but this can give me a sign that the market went back into it on a 1 hour chart and then we left it, and this is the beginning of the movement, right? So because we took this level of sell side and we took this level of buy side, this should be now labeled, there you go, this should be now labeled as means of market structure shift. So the market should not go there. Here, this is an intermediate term low. Market close above the 50% of this order block, uses it as we've discussed, along with the consequent encroachment of this wick. You can see the fact that the market never closed below it beautifully. We've had this daily target of mine, previous daily buy side, fortunately not within the time period in which I've wanted. And this is how I determined this trade idea. Of course, I did not trade it, but this is how I determined it in terms of intraday volatility trading. I saw this 50-minute sell side level taken, 1 minute chart. I saw the market going up. We were trading around here when I came to the chart. So that was, I could have entered based on this inversion gap here, as inversion gap is and this is of course for the mentorship purpose. Inversion gap, or this inversion gap rather, this can be used as a reclaimed BISI because it's a BISI. It can be used bullishly within an expansion to the upside. Basically, I saw the market taking a level of sell side. Market closed above this. I would have entered at the high, placing my stop below the mean threshold of this order block. Another buy side liquid simple being taken. Reason why, again, is if the market would have went there, this should have been already a balanced BISI. So there would be no reason for the market to go back below this low. That would be the trade. And if I would trade intraday volatility, my exit would have been above this, or 50% between this and my level, or even at this level, and I would be done with it. Reason being is because, again, I'm aiming for very small targets within this perspective, because we can see the market jar up and down. 15. This is the BISI on a 1 hour chart that I was talking about. Here, market went back into its lower quadrant, and we are seeing the market coming into the daily CB consequent encroachment, which is the daily target of mine. Come back to a 15 and to a 1 minute. So again, 850 or 830 sell side. When was it taken? 930 opening. Took that sell side level. Unfortunately, our macro did not do much. It happened before. It always happens when I stream this for you guys. It always happens before the macro. It's a crazy coincidence. Sell side level being taken. Swing low. Here, what do I do? First PDRA, second PDRA, third PDRA. If I'm looking for bullish prices, what do I want to see this as? I want to see the market close above it. I want to see these fail. They failed. So what do I anticipate this to be? A swing low that stays, right? And this I also anticipate to be an intermediate term low. The reason why is because we have a swing high, a swing low to the left, and a swing low to the right. We would not have this if I was trading this BISI, but I would anticipate this. If you are trying to trade a BISI, then you are trading an anticipation that the swing low would form here. Market goes back. If I anticipate this to be an intermediate low after we trade back into this BISI, and I anticipate this BISI to be a balanced BISI, then this here should be an intermediate term low, yes. And this means that we should not go below this, because this swing low to the right and the anticipated swing low to the left and the anticipated swing low to the right. What I saw after is the market closing. This is, and I'm explaining this again for mentorship purposes, order block. I would anticipate this to be an order block if I was anticipating the market to go higher. Then how should the order block be formed? The order block is formed when the market trades above it. Here, instead of this candlestick here, this became an order block. But what I do is I anticipate it to become an order block. And for that to occur, again, the market has to go above its high. So how do I determine whether the market is going to go above this order block's high or not? Market open, lower, below this low, and instead of this small busy, instead of this order block, and it closed above the 50% of this order block, which means that we have to go into the 75%. Exactly the rule I gave you for the higher time frame levels as well. The market closed above the 50%, which gives me the information that the market is going to close above the, or is going to go into the 75% of the order block. We have to use, or I would want to see the market use the 50% of this to expand higher. And as we trade above this, I know that this is now balanced. Immediate rebalance here, beautifully. Swing high, market goes higher, breakaway gap, and this would have terminated my trade. We fell short of that CB consequent encouragement as well. If I was trading the 958 cents in macro right now, which I am, I would not try and do it because of these types of movements, right? But if I would to trade it, I would wait for the 10 o'clock actual starting. 1 P3, 2, and I'm looking for this third, which also correlates with the balanced price range dealing range. So I would only want to see the market go back into this busy here. If I was trading this 950 and 1010, I would wait for the 10 o'clock because we can see the market retrace back. It would go back into this CB, perhaps even take a means of sell side, and then after that, because I'm anticipating the market to expand higher, I will trade within the expansion. I'm not trying to trade when the market is coming back into this retracement. And of course we can if we are a retracement based trader. So if we are trading based off BISIs in this case, but I am more of an expansional inversion gap trader. So when I see the market closing above this or above its consequent encouragement, I anticipate the market to use that as a support, and then I would place my stop again below the mean threshold of this, or even the lower quadrant, because if the market goes below this low, then I would want to be out anyways. So I just saved myself out of incurring more risk and more of a loss if I would not have any degree of a stop loss. Let's see how the market operates. I like the fact that we fell short of that level because this indicates that the second time in which we're going to go into it, we're going to go even with more distance. And I believe we're going to pass it. And if we pass it, then we have a high degree of probability that we're going to go into the upper quadrant or 75% of this CB. So what I do right now is I don't anticipate the expansion to start now. I'm looking at this CB. I want to see how it performs. And what I also do within my mind is I think about how the 4-hour chart looks like. So between 6 o'clock to 10 o'clock. Again, the reason being is because the 4-hour candlestick ends at the 10 o'clock mark. So we're now trading within the closing of that candlestick. And if that candlestick closes higher and it closes on the high, then we can anticipate a scenario like these ones, right? So imagine this is a 4-hour candlestick. Let me just show you a better one. Let's just think about this one. The market closes, let's just assume that this is not a wick and it's a body, and we have little to no high in terms of a wick. Then the next candlestick should open, form the low with speed, and then it should continue higher because we're trading within this exact expansion movement. Now imagine this for the 4-hour chart, right? What would this mean for the 4-hour chart? It would mean that at 10 o'clock we would open, we would go back below a means of a sell side or something on a lower time frame chart, and we would expand higher with speed. But for me to trade the expansion, I first have to wait for that low to be created or for that retracement to be created. See, this is what I'm looking at. I would want to see this low being taken now as a means of sell stop raid, going to this busy low, closing the bodies above the sell stop raid, and continuing higher, starting the expansion above this high. Minus 1.5 standard deviation, minus 2 standard deviation for this leading range. Let me project it because we have small wicks, so we can use the wicks. You can see the respected this. Minus 1.5 is here. And let me also get the breaker because I like breakers more in terms of the logic. Look at how beautifully we closed here. Minus 2.5 above that CP constant encouragement. Sell stop right here. I allowed the market to go back into this right now. Reason being is because we've had 2 of my daily levels being taken, so we can do a retracement back into a discount in this case, but I would not want to see this low being violated because this is the intermediate term low that we talked about, number 1, and 2, this is the low that sent price higher above this high. That's why I'm taking this low here and not this one. I'm looking at this busy as a means of a discount retracement. I would want to see this as a wick, so I don't want to see this closing below this busy here. But if it does, then it shows exactly the conditions that I do not want to trade in. What do I have? Okay, sell stop raid is what I want us to do. Sell stop raid. This acts as a breaker. And let's see if we can get something out of this movement. Ten o'clock starts. I would want to see the market form a swing low here. I'm looking at the 75%, the 50%, and also this busy. 50% of this breaker. I would have preferred for the market not to go into that, but if these are the conditions, then these are the conditions. And if the market goes and closes below that breaker 50%, then I would not be highly opinionated about any bullish type of price action. This busy and also this busy, the market can reach back into it, but I would not want to see the market close below the 50% of this. And if the market reaches into this, I would want to see the body stay above. This busy. I'm not going to be highly opinionated, but right now I would prefer this to be the swing low. I anticipated if that is the case, I would want to see closures above this hourly level. I would like to see the start of the expansion higher. I would like to see the market closing above the constant encouragement of this wick, using it as a means of support. I'm also looking at this as, if we're correct, as a future bullish order block, which means that I would want to see the market close above the 50% as well, instead of this candlestick here or the next. And I'm looking forward for this to fail, for this to fail, and eventually for the order block opening price in this case to fail. I would want to see this candlestick right now go higher and close above this constant encouragement of the wick or the tail. Leave this low intact. Reason being is because we opened, went lower, higher into it, then we closed here. So if we are bearish, we should never go back into this here, because the market has already done buy side delivery and sell side delivery. See? And this is my narrative stop out. So I'm going to recap everything that I've did instead of this current price action that we're looking at. I was looking forward for a consolidation based day with a soft bullish bias. So I was not looking for anything in terms of bearishness. I was also looking for intraday volatility trading, which involves a means of a sell side in this case being taken. I was looking for very short-lived runs and very small surgical strikes, which you can see the reason why right now. And I have framed this run here. I've stated every singular detail in terms of this run. I've stated the fact that if I was to trade this here, and I would have missed it because I was here, I was just framing the narrative, like swing low being taken, everything. So by this candlestick, I was already finishing to explain, and then we were off. So I would have missed it, and also it would be out of my trading macro, so I would not even consider it. I would just taper it. But if I was to trade, and let's just assume that this would be instead of the 950 1010 or 1050 1110, then I would have gotten out here. I've explained why, and this is the why, right? And I've also detailed the things that I would want to see if we're talking about this here. I've detailed the things that I wanted to see. I wanted to see the market close above the 50% of this order block here and then use it as a support. Never saw that. I saw the fact, or I wanted to see the fact that the market, if we were correct, I would have wanted to see this swing low stay and this to close above these 75% of this here, because we've already went into the 50%. We never saw that. We saw this lot being taken, and look at where we're trading right now. Let me just see, because you've sent darken or thicken your cursor. Okay, I'll do that, no problem. Thank you for your feedback. I'll do that within the next session. You can see that there's a notification going on for the StoianCapital Discord, but I do not know what it is. There's one notification going on. Let me just not this one. Pop out. General. I believe it's the fact that you joined. I don't know. Let me just put it back. Full screen. Okay. Right. Let me just switch back to 15. So basically, we were looking at this 15-minute candlestick here. Market fell short of that. I believe you're going to leave this high intact right now. I don't know if the market's going to attack it on Friday as well, because it's Friday where the time is the most important thing, right? So if we're looking at the monthly candlestick in terms of the accumulation, manipulation, distribution, based on understanding the time of month, we've already created the manipulation, we've already created distribution, and now we're closing. So if we're going to look, let me just give you an example, a proper example of a PM closing time. If we're going to look at the daily range, right? And this is how I got this knowledge. If we're going to look at this daily range, and we anticipate the accumulation, manipulation, and distribution for all time frames, then I internalize all of this at the time. This is when the daily candlestick closes. I internalize this movement because every singular concept is applied to every singular time frame. I understand that this is going to also happen on a daily chart. This is also going to happen on a weekly chart. This is going to also happen on a monthly chart. And this right here is happening right now inside of the monthly accumulation, manipulation, and distribution. We are inside of this cycle now, inside of the closing cycle. Same thing if we were trading on a Friday. If we're trading on a Friday, what do I anticipate the accumulation, manipulation, and distribution do in terms of the week? I anticipate the market to close on Friday. That is why I care more about the time. I can see that the market has the ability, or I can see the market having targets above the market. I can see the targets above the market, but it might not be the time in which the market will do it. And this is how I determine in which time do I trade. And this is also applicable again to the 4 hour, the 1 hour. But the most focus I want you to have is inside of the weekly and the daily. That is where you start. And after you understand the weekly and the daily ranges, that is where you can expand from. In terms of mentorship purposes, of course. In terms of signals purposes, and of course I'm going to trade your, no, I'm not going to trade your account. I'm not going to say that. I'm going to trade my own concepts. I'm going to trade my own premises. I do not advise you to follow, of course, my trade premises, and everything is, if you win or lose, it is according to you and your own decisions. But aside that, my trading premises, which I might share in a live stream with you, are going to be solely based on professional one-directional trading. I'm not going to do any experiments because I know and I'm accountable for the fact that you're looking at me trading. And I will do the best of my ability to trade within my one direction, to trade professionally, to state where my stop is, to state where my entry is, and to trade according to my rule sets when I'm sharing the live stream with you. And of course, it's with a wink, like wink, wink, right? You understand this. But looking at this, we've had both buy side and sell side being taken, which absolutely beautifully highlights everything that I talked about before the session even began, right? So I just stated the fact that I want to trade intraday volatility. Both trades could have been taken if I was more aware of the fact that, or if I've had more information in terms of the sell side run. I would have preferred that to be my entry within the 950 and 1010. But again, this proves the fact that, okay, we've seen the market taking on a previous level of sell side. We could have taken this and could have taken this as well. So within the last year, what I would have done is I would have filtered out this session entirely. But because of everything that I'm trying to experiment within this year, and I'm not going to hold you for a long time right now because I know that it is very late for you. But because I'm going to experiment a lot of new things and I'm going to go deeper into intraday volatility trading within 2025, I will look at the sessions and I will understand better which sessions perform in terms of the one directional daily bias and which sessions do not perform. And I'm going to more specifically focus on those which not perform. Because if I can anticipate the days in which the market is not going to perform, then I will be better at filtering out these days. And I will also get an edge in terms of if I want to trade intraday volatility, when will I do it? And with what leverage will I do it? And of course, my leverage is going to be limited. My trading is going to be small when I'm trading these types of days. And you now understand why, because we cannot expect prolonged runs. But today I gave you a brief, in terms of mentorship, I gave you a brief perspective into intraday volatility and into what I aim for this year. And in terms of signals, I believe that February's trading is going to be absolutely great in terms of our trading. And that's pretty much it for this session. I'm going to send you the recording as well, so you can meditate upon intraday volatility